Geopolitics heating up, trade tensions rising, while Malaysia's economy is staying cool and composed. Tune in for the inside scoop. Hello everyone, I'm Ron, Equity Portfolio Manager with Manulife Investment Management Malaysia, and this is your Malaysia market outlook for the third quarter of 2025. Global markets remain on edge throughout the second quarter, dominated by ongoing tariff developments and rising geopolitical tensions. Following President Trump's Liberation Day tariff announcement, the administration implemented a 90-day pause for negotiation, which has now been extended until August 1st. This has kept markets under pressure, with trade policy uncertainty continuing to weigh on sentiment. In the US, domestic policy shifts also drew attention. In June, President Trump's Big Beautiful Bill passed the House, extending the 2017 tax cuts, increasing defense spending, and cutting social programs such as Medicaid. The bill reignited concerns over fiscal sustainability, prompting Moody's to downgrade the US sovereign credit rating to AA1. In China, policymakers continue to support growth amid external pressures. The People's Bank of China lowered both the reserve requirement ratio and policy rate while introducing a targeted 10-point stimulus package to bolster priority sectors and stabilize the economy. Geopolitical risks also intensified, particularly following escalation between Iran and Israel, which triggered a brief spike in oil and gold prices. Despite initial volatility, global equities rebounded strongly, with the MSCI World Index rising 11% in Q2. Emerging markets outperformed, supported by a weaker US dollar and easing trade tension. Meanwhile, 10 years US Treasury yields experienced volatility but ended the quarter largely unchanged. Back home in Malaysia, the economy remained resilient despite external headwinds. GDP grew by 4.4% year-on-year in Q1, underpinned by solid performance in the services, manufacturing and construction sectors. The labour market continued to strengthen, with the unemployment rate falling to 3% in April, its lowest level in a decade. Meanwhile, inflation remains subdued, staying below 1.5% throughout Q2, reflecting stable cost and demand conditions. To enhance fiscal sustainability, the government introduced new measures, including an expanded sales and service tax and revised electricity tariff effective July 2025. On the tariff front, initial US import tariffs of 24% for Malaysia had been revised to 25%. On July 9, Bank Negara Malaysia cut the overnight policy rate by 25 basis points to 2.75%, its first rate cut since the pandemic. The move was widely anticipated and aligned with consensus expectations, reflecting rising concerns over slowing growth. Bank Negara Malaysia is expected to maintain a data-dependent approach in future monetary policy decisions. Looking ahead, we anticipate market volatility to persist, driven by evolving US tariff policy, global growth and inflation dynamics, as well as ongoing geopolitical developments. While we maintain a cautious stance on Malaysian equities, we continue to view them as attractive relative to regional peers, supported by fiscal reforms, political stability, compelling valuation, solid dividend yield, and a recovery in domestic consumption. With growth expected to be largely domestically driven, Malaysia is likely to remain relatively insulated from a potential global slowdown. Following Bank Negara Malaysia's recent rate cut, we maintain a neutral outlook on the local bond market. However, this view remains contingent on the central bank's next move as they continue to monitor economic conditions and adjust rates as needed. Thank you for watching Malaysia's Market Outlook. Stay informed and stay tuned for more.